IRS exposes shocking change in 2023 affecting 1040 income tax returns and refunds. We all knew that eventually the United States federal government would need to discontinue their exorbitant and unsustainable recovery stimulus tax credits and return to some semblance of normalcy, as had been the situation up to 2019. And the Internal Revenue Service has confirmed this with its February 2023 news as we enter upon the 2022 tax filing season. As the IRS very clearly stated, unlike 2020 and 2021, there were no new stimulus payments for 2022, so taxpayers should not expect to get an additional payment in their 2023 tax refund. While tax credits have been rescinded to 2019 levels, even though the global economy has endured years of inflation that has seriously eroded the purchasing power of the US dollar and every other international currency. The IRS does seek to soften this announcement, although with very limited success, by citing the continued availability of the premium tax credit under temporary heightened eligibility levels and changes to the eligibility rules for the clean vehicle credit under the Inflation Reduction Act of 2022. However, the recitation of these limited tax credits with temporary expansions as to their eligibility only attempts to distract the taxpayer from the federal government's more consequential reversion of tax credits to 2019 levels. Given the economic realities from the unprecedented period of intense inflation that has seriously reduced the purchasing power of the US dollar and all other global currencies. Changes cited by the IRS include reversion in the amounts for the Earned Income Tax Credit, the Child Tax Credit, and the Child Independent Care Credit, which are reverting to their lesser amounts from the pre-COVID era. For the Earned Income Tax Credit, by way of example, this means eligible taxpayers with no children who receive roughly $1,500 with their 2021 tax filing will only receive $560 with their 2022 tax filing. For the Child Tax Credit, by way of example, this means an eligible taxpayer who received roughly $3,600 per dependent with their 2021 tax filing will only receive $2,000 with their 2022 tax filing. For the Child Independent Care Credit, the maximum of $8,000 that was in place for the 2021 tax filing has been reduced to a maximum of $2,100 for the 2022 tax filings. Also, with respect to 2022 tax filings, taxpayers that don't itemize and take the standard deduction cannot deduct their charitable contributions in their 2022 tax filing. What these examples confirm is that the IRS's stated return to 2019 levels for tax credits, taxpayers can anticipate a significantly smaller tax refund than what might otherwise have been attained in the two prior tax years. And with the inflationary spike of the past few years and the corresponding loss of purchase power of the US dollar and other currencies, these alterations are going to seriously impact those individuals who really needed the benefit of these tax credits, given that they disproportionately impact people who are supporting others, be it children and or dependents. This is a stated position of the IRS, so you can expect these reversionary changes to have the financial consequences that the IRS is clearly warning of. With this reversion to 2019 levels, their impact upon taxpayers could be quite consequential, especially as its impact is not necessarily limited to the examples previously identified, but could be far more consequential to taxpayers and their credits and benefits when the entirety of these changes are analyzed and combined with global economic developments. Thank you.